The markets just got rocked by Jerome Powell. In a much-anticipated speech, Fed Chair Powell didn't just hint at trouble ahead, he basically lit up the stagflation signal flare. He said tariffs are highly likely to drive inflation higher and warned that those effects could last longer than anyone expects. That's not just a passing comment. That's a serious macro warning. Here's what's got everyone on edge. Powell said the Fed might find itself caught between two impossible goals: controlling inflation and supporting jobs. That's classic stagflation territory, rising prices and a slowing economy. If that happens, the Fed will have to choose which fire to put out first, and Powell didn't sound too eager to move in either direction just yet. He made it clear, the Fed's priority is to prevent short-term inflation shocks, especially from tariffs, from turning into a long-term problem. That means if price pressures linger, rate cuts could be off the table, no matter how loud the recession alarms get. And it's already getting loud. The risk of recession is climbing because Powell is pushing back rate cuts. The market reaction? Brutal. Stocks dumped right after Powell's remarks hit. Traders were hoping for reassurance. They got a reality check instead. What makes this even more interesting is the contrast inside the Fed. Governor Waller just said earlier this week that if growth slows and inflation stays hot, the Fed should still cut because the recession risk outweighs inflation. But Powell isn't buying that, at least not yet. He said we're in a good spot to wait and watch. Translation: no pivot, no clarity, just more uncertainty. And remember, this is all happening while Trump's new round of tariffs are still landing. The Fed is trying to navigate an economy that's getting pulled in every direction. Strong retail sales here, collapsing business sentiment there. One moment, it's resilience. The next, it's risk. So now the big question, how long can the Fed hold this line? Because if inflation expectations start to drift higher, and Powell admitted they're already creeping up, the central bank could be forced to tighten, not ease. That's the nightmare scenario: cutting rates into inflation or hiking into recession. The markets wanted clarity. What they got was a warning. And if Powell's right, we might be staring down the barrel of a stagflation story that's just getting started. Subscribe for real-time breakdowns. We decode the macro noise so you don't get blindsided.